after today? Closer to the end than the beginning?
Well, I mean, I think we've been at this for over 5 months now, this correction both in stocks and bonds. We've had multiples already contract over 20%, going from one standard deviation expensive to now fair value. And we've also got bond yields trading much closer to the top of the 10-year ranges. Now, it doesn't mean it's over. We do actually still expect a bit of a rocky summer here over the next few months while we get a little bit more clarity on inflation, on rates, on the economy. But we do think we're much better set up for a better end of the year and years ahead.
Okay, so the multiple has contracted. Earnings, though, have not. And isn't that the other part of the story that is super important?
Super important. And I do think that we'll still see earnings expectations move a little bit lower, especially as we've been hearing more and more about some margin pressure.
Only a little bit lower?
A bit lower in terms of expectations,
okay,
which are now looking for 10% earnings growth this year and next year. That seems entirely elevated. We still think we can do high single digits, but it would be actually really welcome to see earnings expectations move lower. That would be a much better setup for a sustainable rebound in the market.
Disconcerting, isn't it, that analysts have yet to take down the numbers on earnings? What are we waiting for?
What are we waiting for?
Seriously, it seems so obvious to everybody, but the people who actually have to take out the pencils and slash the numbers.
So it seems like the analysts are much more gravitating towards still a very positive message from corporate CEOs and CFOs, while investors are looking at some of the leading indicators for inflation, for rates, for the economy, and saying, well, I do think we need a lower multiple to price in those risks of lower earnings. And we've largely done that. Now, it's too early to wholesale go back into risk, but it's also too late to sell. So much better actually to focus on the road ahead.
If we're closer to the end of the selling than the beginning, you need the CPI tomorrow to really blow the doors off positively, don't you?
I still think tomorrow is just too early. And that's why we still expect a bit of a jittery summer before a better fall end of the year. That's because you need a string of downside surprises and decelerating inflation. Two wouldn't really make a trend yet. And I do think that's why you actually have more upside risk to inflation, downside risk to inflation for tomorrow, which is why you're seeing today some investors take some risk off the table. But if we do get that deceleration over the months ahead, that would be a really nice all clear. There's still interesting signals in tomorrow's CPI, don't get me wrong, much more for a sector read through into which companies are able to pass on costs and which aren't.